This is for topic area 5, factors to consider when starting up and running an enterprise. This is 5.2, sources of capital for businesses. So what is capital, first of all? When you are running a business and you are the owner or a group of owners, you need to be able to get money for various different things. So the money that you need to actually start up or expand a business is called capital. There are various sources of capital and each one has got its own benefits and drawbacks. The ones that we need to cover are own savings, friends and family, loans, small business grants, crowdfunding and business angels. So let's look at own savings first. Pretty obvious what this is talking about. It's when you use your own money to fund the business startup or invest into the business. So a lot of people might save up all of their own savings first before actually opening up or starting up their business. So there's a few obvious advantages to this. Number one is you don't have any paperwork to fill in or complete. You don't get any interest added in, so you're not going to have to pay back any more money. And you don't have to make any awkward repayments. All the money is yours already, so you're not borrowing it from anybody else. Don't have any paperwork, don't have any interest, don't have to repay it back. So the obvious disadvantages is if the business fails, you've lost all of the money that you've put in. And obviously, you've got to have their own savings in the first place. Some people just don't have that money to start with. So if your own savings is not an option, there's always friends and family, whether you borrow money from some of your friends or a family member to fund your business. Sometimes this could be as part of an arrangement where they have some sort of share of the business as well. Now the benefit is they're probably not going to charge you interest if they are your friend or a family member. It could be with an arrangement of a more convenient time to repay. So it could be once you get up and running or once you've made some profits after a year or so, you can pay me back then. And another advantage is that you might not have any official legal documents to sign. Now the obvious drawbacks again is if the business fails, then you've lost the money that you've borrowed off one of your friends and family. Another disadvantage is that it could be very awkward if you do find it difficult to repay them. And another one is that there could be a limit to how much money you can actually borrow from that person. Next, we look at loans. Now, loans are usually offered by a bank or a building society. However, you can get loans from private companies as well. A loan is usually seen as more of a long-term solution for borrowing money. So the main benefits of getting a loan is that you can borrow a large sum of money. It can be a short or a long-term loan. It's quite flexible. You can keep personal relationships out of it. In other words, it doesn't matter if you're struggling to pay them. No one's gonna it's not going to affect your personal life, shall we say. Disadvantage is that you're obviously going to get charged interest. So that means that whatever you borrow, you're going to end up paying back more than what you've actually borrowed in the first place. Another disadvantage is you need to get approved for the actual loan, and sometimes this means you need to have good credit. So to have good credit, that means that you need to have usually borrowed money successfully in the past and repaid it, and also not have any debts that have mounted up, and to have a consistent income, a consistent stream of money that's coming in. Another disadvantage is sometimes you have to put something up as what they call collateral. So in other words, something to back up in case your business fails. So a lot of the time people put up their own house or another business as collateral. Crowdfunding is a relatively new concept that has basically come about through the internet. So it's when a collection of people come together to all invest into a business for some sort of percentage share in that actual business. Now, often with crowdfunding, it's going to be people that you don't actually know. And a lot of the time, it's because they actually want that product or service to become available. So for example, on the crowdfunding website, you might see examples of maybe a specific type of restaurant that might open, or a particular product or a movie that they want to get made. And people like the idea of that actual product or service, so they invest to become part of that actual business. If they are one of the crowdfunders, they are called sponsors. So the name given to anybody that is joining the crowdfunding business is called a sponsor. So the benefits of crowdfunding is you've got a really high chance of getting the money that you want because it's coming from a lot of different people. Another benefit is you've got a very, very low risk of failure, because if it does fail, you're not going to lose much money because it's not yours. So the disadvantages of crowdfunding are that you only really receive a smaller amount of the profits, because all of those people who've invested will have a percentage share of the business. You also have to try to get people to be interested in funding you. Now, this can be quite a difficult task because you've got to kind of advertise to them what your business idea is and do it successfully so that you get that funding. A small business grant is a really useful way of getting capital because you don't have to repay the money. So businesses are sometimes eligible to get funding from a charity, from a bank, sometimes from the government, as an attempt to keep the economy going. So a couple of examples of a small business grant are the Prince's Trust, which is a very well-known one, and the Gigabit Broadband Scheme, which is something in place to help everybody get connected on the internet. So the main benefits of small business grants is obviously you don't have to pay the money back, but often it comes with advice and support. So with the Prince's Trust, you get a lot of advice and support from established business professionals. The disadvantages of a small business grant is it can be quite hard to obtain. So you've got to actually apply and be eligible and meet certain criteria to be able to get the grant. Another disadvantage is it might not be enough money for what you need, because in general they are quite small amounts of funding. Finally, we've got business angels. Now, a business angel is a wealthy businessman who gives you money so that you can set up your business. The most well-known example of this is the TV show Dragon's Den, where there's a panel of business angels and you have to kind of ask them for money, and they have to be impressed with what your proposal is. So the advantage is that you can get large sums of money. You can get any amount of money that you need. It often comes with advice and support from that particular business angel because they are successful, they know what they're talking about, and they can help you. The disadvantage is obviously you need to give a portion of the profit back to that business angel. It's also quite hard to find a business angel, like you wouldn't really know where to look apart from going through the TV show, and also to actually get accepted by somebody as well. So that is all of the different sources of capital. If you've got any questions, send me an email and I'll get back to you.